It's time for the Your Personal Bank Show with Ferenc Toth, President and founder of Secure Estate Management. Take charge of your financial future with your personal bank. Now, here's Ferenc Toth.
Welcome to the Your Personal Bank Show, and we have a special guest today that I'm really excited about sharing with you, and we have Gene and Gidget. I have known Gene and Gidget for quite a few years. What has it been? Over a decade, right?
12 years this year.
12 years this year. That's really awesome. So if you don't mind, welcome to the show.
Thank you.
Yes.
Welcome.
Yes.
Good to be here.
Awesome. So basically what I wanted to do, first of all, is we've been doing a series where I bring in special guests. We're calling People of Excellence. And so I've been sharing, we've had some tremendous guests previously, like John Burley, we've had Vimmel, we've had some folks that are just what I consider rock stars in their arena or whatever it is they do. And so, like I said, I'm excited about having Gene and Gidget. I've known them for quite a few years, and they're rock stars at what they do. So if you don't mind sharing just a little bit about your background, kind of where you come from.
Well, actually, I went to business school, got my MBA, and was still searching to find more answers about money.
Okay.
And I met you at a real low point in my life. I had recently been widowed and was climbing out of a financial pit.
Sure, that's tough, for sure.
And within a 2-week span, I lost my husband and my job. And a representative of your company actually had given my mom some services.
Okay.
And I liked what the company did. My first encounter, really, I was there to protect my mom.
Right.
And I gave that rep like 20 questions, and you're not going to scam my mom.
And to kind of fill everybody in is, Secure Estate Management. We've done, as I've said, coming on 16 years. We've done a lot of estate planning, retirement planning for folks. And so we, of course, had met your mom through a workshop that we had done.
Right.
To do some estate planning.
Updating her trust, exactly.
Right.
And so I was there to protect my mom.
Of course.
And I ran that poor rep through all the questions and made sure that he wasn't scamming my mom. And I actually ended up being so impressed with the rep and the company and what they did. And as I said, I was at a place where I had lost my job. And I said, I understand what you do, and I like what you do and your company's philosophy, and can I come work for you?
Right. I remember that.
And I should have been nicer to that rep because he ended up being my manager for a couple of years.
Sure.
And he gave you a reference for me, and that's how we met.
Exactly. So, and obviously we took care of your mom's situation still are, right?
Yeah, we still handle our trust.
Excellent. So you decided to become work with us,
right?
And then, of course, about like I've shared with people on the radio, about 7 years ago we were introduced to the personal bank concept, and so our company started offering that. How were you introduced to that idea?
Well, actually, it was a phone call from you after you had learned about it. I think I was one of the second ones to hear about it, and you were telling me how fantastic it was.
Right.
And opening my eyes that this could be done. And I said, why haven't we heard of this before? And you said, this was a secret to the ultra wealthy. But you know what? This would work for the common people.
Right.
I don't only say common or ordinary, but for the working class.
Sure. And really, it's not really secret. It's been an idea that's been around for a long time. It's just what I've found, as you know, the most financial advisors are not familiar with the concept. Maximizing cash value. They use insurance as a death benefit protection tool primarily. We do that too when the situation is appropriate, but our focus really is to maximize that cash value for folks. And unfortunately, most people are just not introduced to that idea from their typical financial advisor. It's more common in the wealthier groups, but not with the typical folks. And again, that's what we've been trying to do, is share that with everybody.
Right. And when you shared it with me, the first thing I wanted to do, as I had accumulated some money, now we're years I had gotten somewhat out of my financial pit, but this was a key to help me get the rest of the way out of my financial pit.
Sure.
I put my nest egg into that system.
Okay.
And it's worked really well for me.
Awesome. And I know when we first met, Gidget was, like you said, you'd lost your husband and all that. It was just you. But right around this time, Gene kind of came into the picture, right?
7 years later.
Yeah, exactly.
So how did you guys meet?
Well, we were involved in some other organizations, and I guess one of the things we had in common is that we both love aviation. And most of my career, my degree was in mechanical engineering, but almost all my entire career was in the aerospace industry, everything from being a mechanic to being a field service engineer and working as a pilot. And it was one of those things that was great at the time. I really enjoyed, especially working as a pilot, flying tours and things. But it's the sort of thing you can't do forever. And it just happened to be a good time for a transition for me. And what I felt most about was that it was a company that was just interested in giving the best of the best to all our clients. Our obligation, not only ethical obligation, but our real concern with what's best for our clients, not what gives us the biggest commission.
Right.
And it just going to bed at night going, this is something I really feel we're giving people a great value.
Well, and if I remember right, Gene, because you got that analytical, you're a pilot kind of background, engineering, right? And I understand you're both pilots, right?
Yes, I am too. Actually, I had my license before he did, but he's much more accomplished.
Okay. So we got two pilots here. That's awesome. But I know initially, Gene, you were kind of resistant. You were kind of hesitant to the idea of getting involved and sharing this idea with others. I know Gidget was really very proactive. What made you kind of come around to the idea that made sense?
I get really just looking at the numbers, and now about 3 years ago, I was looking at selling my house, and to just know that money was available if we needed money to refurbish the house, how simple it is to just make a phone call and the money's transferred to your checking account, and just knowing how easily it works and what a great value it is. It makes me feel very good about sharing it with other people.
And, anybody who's been listening to the show, you guys have too. I know I share constantly where, one of the keys to financial success is having access to capital.
Exactly.
Access to money, readily accessible, without any penalties or other restrictions, taxes, whatever. And, for opportunities.
Exactly.
Like selling your house or for needs when, those financial needs come up, right?
Right.
You need a car, and rather than having to go to a car dealership and apply for a loan, to just think, this is how much I can spend, transfer it to my checking account, and now I'm going to buy a car, period. And
going back to Gidget's scenario, like when we first met, that you were dealing with losing your husband, losing your job, tough financial time. If you had some, you had needed a car for example, that would have been pretty tough to try to.
If I had the personal bank system, then my life would have been a lot easier, no doubt. And then I just wanted to clarify, 7 years after being a widow, Gene and I had been friends, and now we are a couple, and we help people together. And together, we jumped on the personal bank system personally, and we both got our first personal bank set up, and that's what he used to help renovate the house. Now we have 6 of them between us.
So what you're trying to say is you started as a client.
Exactly.
Started using this tool yourself, this financial tool, and found it worked so well for yourself, you got excited about sharing with others.
Exactly.
Yeah, we're almost evangelistic about sharing it with others.
Sometimes a little too excited at times, right?
Yeah, I can be.
Yeah. And those of you who don't know, I've known Gene and Gidget quite a few years now. There couldn't be two more opposite people, personality-wise, I think, as a couple.
Well, he calms me down. I'm the spark plug.
Right. Yeah, she's the high energy.
He keeps me grounded.
There you go. It's a good mix, though.
Yeah.
Yes, it is.
And you guys have found, and we'll talk about this in the next segment here, but you guys have found a neat way of working together with that very, very different personality types.
Well, and especially when you're working with a couple, how often, the husband and wife can have different views or how adventurous they are or conservative they are, and to just be able to hear the whole thing.
Awesome.
And we find that we meet with a lot of couples, and he and the man will be talking. We'll have
Sure.
2 conversations at once, and the girls are talking,
Right.
and it works.
Well, we'll talk about that a little bit more, but if you want some more information, contact us at yourpersonalbank.com. And in the next segment, we're going to talk a little bit more how Gene and Gidget use their personal banks and what they see for the future in the next segment.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back to the Your Personal Bank Show. We're excited here to have special guests, like I said, part of our People of Excellence tour, if you will. I have Gene and Gidget. I've known them for quite a few years, 12 years, we just realized, coming up. And Gene and Gidget are a pretty interesting example. They've got a lot of varied backgrounds, both in the aviation field. I understand, Gidget, you were a real estate agent for quite a while.
Yes, I was. I was also in advertising for a while.
Yeah, you were in the advertising world, too.
Her MBA focused on marketing.
Okay, with MBA, all that kind of good stuff. Gene, more in the engineering, aeronautics, pilot arena.
Exactly.
They came together as a couple about 7 years ago. Started out with as a client, personal bank clients, and eventually became, liked it so much, wanted to share with others and work with us as agents in Las Vegas.
Exactly.
That's awesome. So I wanted to, I guess, ask you guys. You mentioned in the previous segment, you started 7 years ago, I believe, with your first personal bank.
Right.
You have 6 of them now. Is that right?
Between us, we each have 3, or
Yes.
do you
Sure.
have 3 or 4?
I have 3.
Okay, we have 6 between us.
Okay.
3
And
each.
So if I could ask, maybe for some of the listeners, what are some of the ways you're using your personal banks that's working for you or have recently?
Well, the real estate, just have the money that it's earning you 5% interest when you don't need it. And the moment you need it, just make a phone call and you have it, whether you're buying tile or paying a general contractor. But just knowing that the money's there, in a couple of business days, just makes it so much easier.
So you have access to capital funds, and you don't have to ask anybody permission or qualify, right?
You don't have to worry about, am I going to get approved or am I going to get approved for such and such dollars? Just make the phone call and the money's there.
Yep.
Even
awesome.
better is we make our own payment plan. There's no
Okay.
requirement to get it back next month. We're not under the
Right.
gun when we were rehabbing a house.
And I remember when you guys were doing that, weren't there some delays?
Oh, no, that never happens in real estate.
No, never. And if you'd had, say, borrowed the money and had payments, would that have caused some challenges?
It just puts you in a different mindset, especially when it comes time to sell the house. That you can, if it sells in 2 weeks, that's fine. If it takes 2 months, that's fine. Worst case, if it had taken a couple of years, wouldn't have been any financial stress.
And that's kind of important, taking the stress off, not knowing, and not, I always say, if you don't have access to funds, that's where the financial stress comes from, right?
Exactly.
Absolutely.
Yeah.
What do you see as maybe more long term? What do you see the personal bank doing for you guys?
Actually, it's escalating our advancement in real estate investment. I was able to buy another house.
Okay.
And that one we plan to hold. We don't have to sell that one because of the personal bank system. And I did get into severe, I call it restoration. It's beyond fixer. I had to completely redo the plumbing, the electrical. Without a personal bank, that would not have happened.
So there you go. Gave you options so you got into a project and got deeper than you thought.
Right.
But that was okay because you had the funds to.
Right, and I wasn't under the gun for a payback plan.
Right.
I didn't have to make monthly payments. Now, the rainbow at the end of the story, I have a tenant there. It's positive cash flow, and I can repay the bank. I'm currently refinancing that house, and I can put that cash back into the personal bank and go do it again.
Do it all over again. There you go. I share with people those kinds of ideas all the time. It's pretty exciting when you can do those things. So obviously, as we talked about, you came together as a couple. You work as a team. You got excited about sharing the idea with other folks. So you work together as a team as agents. What's an example of a client you've worked with that is kind of a fun story? Maybe we could share.
Go ahead.
I think it's Sharon, a woman who just happens to be. She was a flight attendant. Her husband was a airline captain. he was a B-24 pilot in World War II, and just the term that, your friends become your clients and your clients become your friends, that she's lost her husband, but now that it just feels good that she's so financially well taken care of, that it just feels good that we've gave her a great tool here.
And she had her nest egg in the stock market, and she was concerned over that risk.
Sure.
And now it's safe. She's been able to help her nephew out, and they've been doing some real estate investing, and they've bought several properties that now supply them with income, and she's replenishing the banks. And it's the banks, the personal bank system has given her the freedom to not only sleep at night not worrying about risk, but to help out a family member.
That's really cool. I know so many people, they have those challenges with family, loved ones, and they want to help but are unable to. Or if they have the funds, again, there's potential, there's penalties, there's taxes often, various things that happen if they take the funds, or, of course, there's risk of loss in many cases. And here they don't have to worry about any of that.
Right.
Yeah, that's awesome.
I guess the other thing that I like so much is that this is a personal contract between the individual and the insurance company. They don't have to worry about the government deciding to change rules this year or next year or 5 years down the road. It's a contract that's, completely free of, any outside entity deciding to change the rules.
So obviously the personal bank has worked for you guys.
Fantastic.
For going on 7 years now.
Yep.
If you were to talk to somebody or they were considering looking into this, my last question, what would you say to them?
Let's talk. Let's see if it's for you. Let's find out your situation, what your goals are, and see what this can do for you.
As much as I enjoy being in a radio studio myself, just to have your programs recorded and just let people know, listen to the recorded programs, look at the information. If this fits for you, we'd love to talk with you. Yeah,
and of course, as Gene was saying, if you want to listen to any of the previous shows or this one even, go to yourpersonalbank.com. You scroll down, it has all the previously recorded shows. Of course, if you're in Phoenix, you can listen noon on Tuesdays. Tune in to 1510 a.m. We're broadcast live every Tuesday. But yeah, I've had a lot of folks now going back, listening to the previous shows, get back with me and say, that I've heard about that, or somebody talked to me about that a while back, and I heard you talking about it. I want to, talk to you some more. As you said, certainly not for everyone, but if you have looked at this, or maybe you did consider the numbers, it didn't work for you, you might want to look at it again, because a lot of things have changed recently, haven't they?
They've changed in very good, positive ways. And the other thing, you just keep an open mind that even if you're not eligible to get a policy yourself, you have a business associate or a family member that it could work out very well to team up with another person on this.
And Gene, you bring that very good point. I've been asked that a number of times. It's like, okay, I understand there's a cash component to the personal bank, there's a death benefit, and somebody has to qualify for that death benefit. What if I can't qualify because of age or health or whatever? And like you just said, Gene, is there a family member, business associate, some other organization, some other relationship that you're the owner, you control the money, it's yours.
Exactly.
You get all the benefits, access to the money, tax favor, growth, access, all that good stuff. But, they're just the insured so that you can get qualified.
And exactly. And if that person happens to be a child or grandchild that's looking at going to college in 5 or 10 or 20 years, that how it can be so good for everyone involved.
Well, I'm going to put you guys on the spot here a second. Any last thoughts before?
For me, spiritually, doing this on a personal note, when I was working advertisement, I would stay awake at night dreaming up and thinking of a great ad campaign, and I'd put together the best thing I could, and we'd turn it over to the business owner, and I'd cross my fingers and pray that it would make them more money than it cost, because those advertising campaigns were very expensive.
Sure.
And sometimes it did, and sometimes it didn't. With this, I absolutely know every single family we help is better off than they were before.
That's really awesome.
I guess I think of times in my life when I was having challenges and my family members who helped me, And to just know that had this policy been in place at the moment, I would have been in such better position. It makes me feel really good about sharing it with others.
That's awesome. Well, Gene and Gidget, thank you for joining us today. I think you can see from listening to them that, they're definitely people of excellence. And if you want to have more information about Your Personal Bank, again, contact yourpersonalbank.com. Gene and Gidget are located in Las Vegas. So if you're in that area, I'm sure they'd be happy to talk to you or meet with you.
We'd love to.
Call the office, ask for Gene and Gidget or those Nevada people.
There you go. Excellent. So, like I said, tune in every Tuesday at noon to Your Personal Bank Show, or contact us at yourpersonalbank.com.
For more information on Your Personal Bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back. And again, I want to thank Gene and Gidget for joining us as special guests and sharing their experience with the personal bank concept. So I just want to take a few minutes and just kind of share a little bit, what is your personal bank? How does it work? Well, before I teach anyone how to operate a personal bank, I got to teach you one quick little key wealth strategy, and that is you got to think like a banker versus an investor, because if you're going to operate a bank, you got to understand how banks really operate. So what's the difference? Well, it's a big difference, and here it is. See, what most investors do is they trade hard-earned dollars for assets with the expectation the asset will increase in value, right? We work hard for our money, and when we do that, in most cases. And then, what you find is most investors focus on the potential gains only. How many times have you talked to somebody, and I don't care what kind of investor they are, in the market, real estate, cryptocurrency, whatever, it doesn't matter. And they're excited about an investment they did. And what do they talk about? Well, they talk about their rate of return. They made X amount of percent of dollars. They made so many dollars. And almost to the exclusion of any other thought. See, rate of return on an investment is important, no question. But it isn't necessarily the most important aspect to any investment. What do I mean by that? Well, I think Roy Rogers said it best when he said, I'm more concerned about the return of my money than the return on my money. He has a very valid point. What do I mean by that? Again, you get an investment, it sounds great, you can get all this tremendous rate of return and all that kind of stuff, but isn't it important to make sure you get your money back? I've had this happen with many clients over the years. I invested in this and it sounded great, and I took the plunge, and it all went kaput. That's not a good situation. Unfortunately, it happens more often than folks like to care to admit. And the thing is, you got to make sure you've got some downside protection. That's what a banker does. Also, what kind of cash flow did it create? And what do I mean by that? Well, cash flow is actually more important for most folks than appreciation. And why is that? Well, it's really simple. You see, if there's a cost to live, right? We have expenses. We have monthly, regular, ongoing expenses, food, clothing, food, shelter, house, and clothing, right? I mean, those are the basics. We need a certain amount of money to live. And if we don't have that income, that's what causes financial stress and financial problems. Well, if you have an account or an investment that goes up in value, but you don't have access to it, or if you do have access to it, you've got penalties, taxes, or various other things that could, come into play to prevent you to have access to it, and you need the money to live on, doesn't that cause financial stress? See, the thing is, it's more important to ensure you have access to capital and you have cash flow than it is what the numbers are on a statement as far as what it went up to. I mean, yeah, it might make you feel good, but it doesn't pay the bills, if you know what I'm trying to say. So make sure you focus on these other things, the return of your money. What's the downside protection? What's the cash flow involved? And what's the rate of return? Those are three biggies right there. And, a bank does that, okay? And I'll show you what I mean by it. So again, most investors trade hard-earned dollars. hoping, the expectation the asset will increase in value, and potentially, in most cases, focus on the potential gains only. Let me use an example. Have you ever taken out a mortgage or a car loan? And most people have at some point in their life. And, when you signed the papers, you knew you'd have a payment, right? Did you plan to make those payments? Well, of course you did. Obviously, you wouldn't have been signing the papers otherwise, right? Well, guess what? The lender knows that too. In fact, you went through a whole process to qualify for the loan, right? And in the off chance you did not make the payments on that house or that car, what would have happened? Well, they would have taken the asset, sold it to somebody else, and received payments from that person. Is the lender really risking their money in that case? See, here's the thing to understand. Collateralized loans almost never lose money for the lender. They might have to wait a while sometimes, particularly if they repossess or foreclose on the asset, but they'll resell it to somebody else and create payments from them. And see, what's happened is the bankers created a secure cash flow, and they've protected their downside. Okay? So the key to thinking like a banker is making sure those two things are in place. What's the cash flow, and what's my plan B? What's the collateral or downside protection? Okay? Now, we're going to apply this to the personal bank. When you get a check, what's the first thing we all do with it? Again, understanding how a bank really operates. Well, we deposit that money in a bank, right? And then what does a bank do with our deposits? Well, they loan it out for cars, houses, credit cards, various things, creating a cash flow. Now, here's the other thing to understand about banks, and then this will help you understand the personal bank concept and really how it works. Let's say you walked in the door and you opened an account in a bank. You gave them money. The next person walks in the door and they qualified for a car loan. Does the banker take the cash you just gave them and turn around and give it to the car loan person? See, most people think the answer is yes, but the reality is no. They actually put the money in the safe and then they borrow against it. Now, is cash an asset? Well, of course it is. Can you borrow against an asset? Yes, we do it all the time with cars, houses, 401ks, all those various kinds of things, right? So what I say is do what the banks do. Banks in general don't invest in the stock market. It's public record. What they do primarily is earn compound interest on our deposits. And then they borrow against the cash they hold to more interest, so can you. So what does a personal bank do? And by the way, if you don't remember from the previous segment, I'm chairman of the board of a bank in formation currently. We're in the process of starting a bank. I've been sharing this concept with folks for years, but being on the board of a bank gives a little more credibility in that arena, if you know what I'm trying to say. So what does a personal bank do? Creates an asset that's guaranteed and insured. You have access to capital day one. That's important to understand. You're an interest on the asset and the borrowed funds, and you have a positive arbitrage potential. We're going to spend a little more time on those two thoughts. Of course, you can have income tax-free growth and withdrawals, too, if it's done correctly. Pretty exciting. Now, the tool we use, and we've already talked about it in the interviews with Gene and Gidget, is an insurance tool. Some people are surprised by that. We could use any financial tool. Why do we use insurance? And a very specific type, by the way. Well, it's a process of elimination. First of all, we want compound interest. We want an increasing cash flow. We want our money to grow every year, okay? And so that takes a lot of investments off the table. We don't have any risk of loss. You don't want to borrow against an asset that can lose value. So anything market-related, of course, is now off the table. We want to have access to our funds. We want to have access to at least half or more of our funds day one. CDs, some annuities have that kind of safety, but they don't have anywhere near that access, so they're off the table. And, of course, we want income tax-free growth, income tax-free withdrawals, and income tax-free to the heirs. And, again, if it's done correctly with certain limits, this is the only tool. This is one of the only financial tools that will do all that. And then, lastly, positive arbitrage. What is that? I'm going to touch on that a little bit further in a minute. It helps you make even more. Now, my biggest challenge when I say to people, look, you look at insurance, and they stop listening. They think of insurance as an expense versus an asset. They think, gosh, I have the car, the auto, last things I need another bill, and stop listening. Miss the whole point. What I'm talking about is a high cash value type policy that most people are, I find most people not familiar with, really. There's a fixed option, an index option based on the S&P 500 typically with guarantees, principal guarantees, and there's a leveraged option. We can look at any or all three of those options depending on your situation that makes more sense, whichever makes the most sense. Now, the last thing about this, and I'll touch on the next point, is I always say, do you have a life insurance policy? And the answer in most cases, if somebody does, is they have a life insurance contract, but really what they don't have life insurance. They have death benefit protection. In other words, you're paying a premium to a company to send you a check if something happens to you, to your heirs, right? That's death benefit protection. That's not life insurance. It's called life insurance. I get it because it sounds nicer, okay? Let's be real, but that's what it is. It's death benefit protection. That's not what I'm talking about here. If you have those needs, certainly we can help you accomplish that. But the personal bank concept, again, I'm going to share in the next segment how it really works, how it's different than a traditional, or what most people are familiar with as a traditional insurance policy. In the next segment, we'll go into detail on that.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back. We're rounding third. We've been talking about a lot of great stuff. We had some special guests today, Gene and Gidget. Really appreciate you guys joining us, sharing your experience that you've had with the personal bank concept. And just, in the last time, just kind of sharing a little bit more how the personal bank works. And I was talking about, we use a high cash value insurance tool. We could use any financial tool, okay? But there's one that fits the bill, works the best. It's the most efficient for what we're trying to accomplish. One of the analogies I use all the time is, if you were traveling across the country, could you drive? Could you drive from L.A. to New York? And the answer is sure. Could you take an airplane? Of course. Which is quicker? Which is more efficient? So it's what it is. It's about which tool is the most efficient. We want compound interest, no risk of loss, access to the funds, tax benefits, and we want positive arbitrage potential. So here's how it really works. Now, again, I'm on radio, so visuals are always tough. But let's use, if you can give me just a second, and think of a teeter-totter. And you basically got your cash value, and you got your death benefit. It's 2 buckets of money, if you will. Put them on a teeter-totter. Cash on one side, death benefit on the other. The vast majority of insurance contracts, life insurance, is structured to maximize death benefit. It's a death benefit protection tool. That's its purpose. Term, of course, is that 100% death benefit protection. Other other insurance products have some cash, but again, in most cases I run into, the vast majority, I'm talking literally 99% of the time, is they're maximizing death benefit protection. Now, if you have death benefit protection needs, as I do, like family, business, certainly address those. I'm not negative to that. That's an important aspect. But understand if you have some of that, it's a death benefit protection tool. Understand what the tool is for. It's not designed really to grow cash. You can go online, you can research, you can see a lot of places out there where people say, hey, life insurance is a bad place to invest your money. Well, if you're looking at contracts that are structured to primarily be death benefit protection tools are right. And again, the vast majority are structured that way. So they're not a great investment tool. They were never intended to be a great investment tool. They're not structured that way, okay? That's the key to understand. And that's why when I talk to people, sometimes they miss the point. Like, oh, I've heard it's bad. No, it's not structured for that. It's not designed, its purpose is not for that. Here's what we do different. Again, think of a teeter-totter. You got the cash bucket on one side, you get the death benefit on the other. Most contracts maximize death benefit, minimize cash. Basically, we do the opposite. We crank the cash to the Modified Endowment Contract, or the MEC rules. MEC, you can look it up. It's a tax rule that's been around since the 80s. There's a lot of flexibility in what can be done there. Most people are not aware of how much flexibility. In fact, most advisors, because they don't deal with this, talked about that in previous shows, the reasons why your financial advisor hasn't shared this information with you. In fact, if you want to listen to the February 4th show, I really go into detail on that, yourpersonalbank.com. Why haven't you heard about this? Why hasn't your financial advisor brought this to your attention? It's an area of specialty. There's other reasons, but go to the February 4th show if you want to know more detail on that. Here's the thing. We structure it to maximize cash and minimize the death benefit within the allowable limits. What does that do? Well, you have a lot more cash, right? And by the way, with more cash, okay, it's going to grow. Okay, and so again, think in the two buckets. You have a cash bucket. You have a death benefit bucket. What is the cash value? What is the cash bucket? Well, it's money you've put in plus interest it earns over time. Contributions plus interest, okay? The death benefit is what your heirs get. It's pretty obvious, right? So on the anniversary date every year, your contract's going to get credited interest, which means there's more money. Now, if you add more, of course, there's even more. But whether you add more or not, because it's getting interest credited each year, you have an increasing amount of dollars. The death benefit may or may not increase, and that's all dependent on how we structure the contract, okay? Now, here's where it gets really interesting, and here's where the power of the personal bank concept and tool really come into play. And here it is. Your interest is credited on the cash bucket annually on both the non-borrowed and borrowed funds. Now, I'm going to say that again. Funds you access from that policy, you can borrow, you can do a policy loan, access the funds. There's no tax consequences to it. No 1099 is issued. You can use the money for any reason. Pay off bills, buy stuff, invest in stuff. But here's the cool part. If you have, let's see, quick example. You have $100,000 cash. And again, don't get hung up on the numbers. Add a zero, take away a zero. The principle's the same. I just want to use a simple example. You have $100,000 cash in your policy at whatever point, and you access 50 of it. Anniversary date rolls around, and if you can do this properly, you're going to get credited interest on the $100,000 cash, even though you took 50 of it elsewhere and didn't pay it back. Why? It's called direct recognition. It's the term the company directly recognizes for crediting interest and dividends, the money that's there. The gross cash value is what it's called. Okay? So you're going to get credited on the full 100 if your cash value was $100,000. Now, whenever you take a loan, there's a cost for loans, right? Well, if you take the variable loan option, which you have two options. You have fixed and variable. The fixed option, contractually guaranteed to maximize at 5%. That's the most they're ever going to charge. Currently, they're crediting 5%. Now, there's some costs of insurance, some other things in there, but the reality is what you're getting credited, what you're getting paid, it's the same, so it becomes what's known as a wash loan, or it's a wash. The money, that money you took in our example really doesn't cost you anything. But there's a variable option. It's based on the Moody's corporate bond average. It's published monthly. It's a 20-year moving average. So it's a very slow moving average. Currently, we're at about 3.4%. Okay, that's the current Moody's rate. And what would change it? Well, when the Fed changes interest rates. That's the main thing that'll cause that to change. Currently, we're in a low interest rate environment, and the Fed has announced they don't plan to change rates for the next year or so. So we're looking at a number of years probably going forward where this rate is going to be below the 5% crediting side. So you're credited 5%, I told you, on the gross. In our example, you had $100,000 cash, you took 50. You did not return the 50, anniversary date rolls around, you're going to get credited the 5% on the whole 100. The 50 that's there, of course, is going to get credited 5%. The 50%, the 50 grand that's not there, that you took, did not return, get credited 5%, get charged the 3.4, the current rate. So you have a 1.6 positive arbitrage. Again, there's some cost of insurance and some fees involved, but let's just say your positive arbitrage is 1%. What happened? You made 1% on money that you took elsewhere. Think about that a minute. What did you do with that money? Did you pay off a bill? Which eliminated interest on a debt? So you're not paying that interest, plus you're making the 1% in our example? Did you buy something? We certainly do those things. If you bought something outright, you're not paying the finance costs of it, right? Plus you can make that 1% arbitrage in our example. Did you invest in something? Well, what was your rate of return on that other investment? Could you add the 1% positive arbitrage to it? You see what I'm saying? It's icing on the cake. When you have the positive arbitrage situation, as we do, you get an extra return on your money. Now, the last thing people say, well, variable, it can change. Yeah, the rate will change. Here's the thing. It's locked in for 12 months when you take the variable rate. And then at any time thereafter, you can choose to go from fixed or variable loan option. So if the variable rate goes above the fixed, which is, again, maximized at 5%. So if that ever crossed over, you could switch. What's my great analogy? We all know if you get a mortgage, let's say you got a 30-year mortgage, you could do fixed or variable, right? What if you could choose the fixed or variable rate each year on your mortgage, whichever was lower? Do you think over that 30-year period you might pay less interest? Think about it. That's what I'm talking about with positive arbitrage. That's the potential you have available to you with Your Personal Bank. Contact us at yourpersonalbank.com for more information, and listen each Tuesday at noon to Money Radio at 1510 a.m. or 105.3 FM.
Listen next week at noon for more information on Your Personal Bank. Contact Ference at 866-515-6280 or online at yourpersonalbank.com.
This show is designed to provide accurate and authoritative information. The presenter and guests on this program do not engage in rendering legal, accounting, or tax advice. Expert advice from a professional involving your specific situation should be sought, if required. Permanent life insurance is a long-term investment. Products, optional features, and riders may have limitations, restrictions, and additional charges and may not be available in all states. Withdrawals beyond principal may be taxable income. Excessive and unpaid loans may cause the policy to lapse. If a policy lapses, unpaid loans are treated as distributions for tax purposes. Replacements may not be suitable for everyone. There may be penalties and surrender charges when replacing coverage. New products may include new surrender charges and contestability period. Policy guarantees are based upon the claims-paying ability of issuing insurance company and do not apply to the investment performance or assets in the underlying variable portfolios. The life insurance and annuity products in this presentation are not FDIC insured, may lose value, and are not bank guaranteed.